Hi, good afternoon, everybody, and welcome to the Co-op Credit Union AGM. My name's Jackie Littlewood. I work for ABCO, the Association for British Credit Unions Limited, and we're just helping out with the technology this afternoon. So everybody that's joined us, and we have 36 members on at the moment, everybody that's joined us will be in listen-only mode. There will be options to ask questions throughout the AGM by typing them into the question tab on your device. So in the top right-hand corner of your screen, you've got the control panel. If you click down to where it says questions and then click on the little triangle on your screen, it will pop out a box that you can type questions. We'll be monitoring the questions throughout the AGM and feeding them to the panel at the relevant time. So that's if you're using a PC or a laptop. If you're using an Android device, and it's indicated with a question mark at the top of your device, and again you will get the bottom a screen to type in questions at any time. And if you're using an iPhone, it's indicated with a question mark at the bottom of your device. There will be some electronic polling this afternoon, so I'll just launch a test poll so you can get used to the technology. So how is the weather in your area today? So it's very wet and miserable in Manchester, and I think majority of us will be in Manchester. So this is just a test poll for anybody that's joined us. We've got 38 members on at the moment. This is just a test poll to get used to the technology, and we'll be using the electronic polling throughout the AGM. So we've got 75% of members that have voted. I'll just give it another few seconds. It's wet and mixed. Looking outside, it's very wet and miserable. We've got 8%. Oh, somebody's got some sunshine somewhere. We've got 81% of members that have voted. So this is how the results will be shown throughout the AGM, and everybody should be able to see the results. So just to reiterate, you can ask questions at any point throughout the AGM by typing your questions into the control panel on your own devices, and we'll feed those through to the panel as we go through. So I'll just formally hand over to David to formally start the meeting.
Hello and welcome to our annual general meeting. Many thanks to all of our members who've been able to join us today and what is our third online AGM. And a big thank you to our trade body, the Association of British Credit Unions, and especially to Jackie, who you've seen, for hosting this session. On looking at our agenda, we have no apologies so we have a full representation of the Board of Directors here today. So on to our first item on the agenda, which is the minutes from last year's AGM meeting for approval. Following feedback last year, we about not getting the minutes out in a timely manner for this meeting, these were sent out with the notice for the meeting to allow you all plenty of time to review. So do we have any feedback or questions from members on the minutes of the last meeting?
If you have any questions or comments that you want to add, please add them to your device. Again, it's in the question tab on your device. Nothing coming so far, David.
Okay, shall we move on to the vote to approve them, please?
Got 74% of members that voted. There's 12% abstained if they didn't attend, and the rest is a yes.
Yeah, okay. Thank you very much. Was there any people who didn't approve there, Jackie? I couldn't see that.
No,
no,
wasn't.
Okay. Right, okay, thank you. Now move on to my to present my report for the year. A reminder, this is for our financial year, which ran from the 1st of October 2021 through to the 30th of September last year, which is almost 4 months ago now. 2021-22 was another challenging year for the credit union. Just after we thought we were finally emerging from the COVID crisis, the Russian invasion of Ukraine saw the return of further economic uncertainty, huge increases in energy and fuel prices, and the return of sustained inflation. Something I can recall, it's my age, from way back in the 70s and 80s, but for many people, this is the first time they will have experienced this type of inflation in their lives. In the last couple of months of our financial year, we saw the beginnings of a sharp rise in interest rates. And of course, on top of this, and unique to the UK, we saw the political instability through the summer of the Tory leadership contest, and then the short and catastrophic reign of Liz Truss. The cost of living crisis affected all of us, with inflation going through the 10% mark and a series of interest rates, particularly in the last 3 months of 2022, just after at the end of our financial year, which took base rates up to 3.5%, and typically mortgage rates are now about 5.5%. The inflation rate is much higher for people, the poorer people, I suppose the rich people in society, where food and energy costs make up a much higher proportion of income. For example, inside that average 10% inflation rate, food prices have actually risen by 17% in the last 12 months. We've been seeing increasing signs of financial distress for our members since late 2021, as the squeeze on poorer households has been ongoing for much longer than just this current crisis, especially when families have one earner in the public sector. It is perhaps only since the impacts have hit the wealthier households, or Middle England, as they colloquially known, with the energy price rises, that the media coverage of problems has really increased. Sadly, this has meant that we have had to say no more often than we would have liked, and we have had to spend more time supporting those who are struggling. We are still proud that we were able to help 3,197 people, members last year, with loans, new loans, only just failing to reach the record number achieved in the previous year. In many cases, we were lending to members who were struggling and finding inflation hard to manage and were excluded from the prime lending rates of the banks and the building societies. Unfortunately, we have seen a 60% increase in bad debts in the year to 177,000, as some members could no longer meet their loan repayments, and this has had a significant impact on our profitability, falling from 65,000 to 13,000. You may recall we reconsidered what we are all about as a credit union in our purpose project in 2021. We reaffirmed our fundamental commitment to supporting members with limited options, providing affordable credit, and helping to improve financial resilience through building a savings habit, and thinking about how we could broaden what we offer to provide additional support to our members' financial well-being. In the last year, we have 3 new initiatives to that last point. We launched a benefits calculator, which allows us to help members relieve the cost of living pressure by identifying sources of income that they are entitled to but are not claiming. We have introduced a budgeting tool to help members make the most of the money they have, and we've introduced a hardship fund to support members who are in desperate need but for whom a loan would not be appropriate. We are proud that we've managed to help families in some very difficult situations through this fund, including keeping children fed and getting away from abusive and violent former partners. Our plans for the future remain ambitious, with new products, new systems for members, and to make it easier for you all to do business with us and for further growth. If we just move on to the next slide, please. We have a couple of photographs here, the board of directors on the left and the staff team there on the right. The pressure on members has a direct impact on the risks we run as a business and the strategy and plans for the future. I'm pleased to say as chair that we have broadened the range of skills and experience in both the board and our staff to ensure we effectively respond to what is rapidly changing and volatile market. Thank you to them all. Two of our board members, we can see there, Chris in the centre in the checkered shirt and David to the right in the jacket, are retiring from the board today at this AGM. We'll have more on that later in the meeting. Next slide, please. This photo shows a group of our members taking part in the discussions on our project, purpose project. So it's thanks most of all to them and to the rest of our members. This is your credit union. We are owned by our members, we are run by our members, and we are run for our members. Thank you. So I will now pass over to Grant, who will give the Treasurer's report.
Thank you, David. So I'll just go into a little bit more detail on the financial position of the credit union. David's touched on it, but I'll go into a bit more detail. So the financial results for 21-22 financial year can be found in the formal report and accounts, which have been published on the website. Not surprisingly, the credit union has been affected by the broader economic environment, which is impacting our members. And there have been two main impacts of that. Firstly, a limit to our ability to grow the loan book and also an increase in bad debt. So whilst the number of loan applications has remained very high, we've sadly had to decline a higher proportion this year. It would simply be irresponsible for us, both in terms of lending out members' money in that way, but also risk putting the individuals into a spiral of debt they couldn't repay. So our loan balances only grew slightly in the year, 2.3% up in the year to 3.4 million total lending. Our number of new loans fell slightly. And whilst that's disappointing that we haven't been able to maintain our growth trajectory from the previous year, that should be set against the context of the previous year's record high level of lending. So by historical standards, our loan book is still in very good shape. Our cost of bad debt increased by nearly 60% in the year as some of our members became unable to repay their loans or keep up with their repayments. And perhaps that's inevitable in today's climate, but it's something that we as a board are keeping a very close eye on. We continue to provision for loans in arrears at a level which is more prudent than the minimum requirements imposed on us by the Bank of England to make sure that we're always one step ahead of that coming through, and we can make sure the credit union's always got enough money. In line with our business plan, we've continued to invest in the infrastructure required to support our members and to support future growth when conditions permit, growing our staff team, improving our technology, developing improved communications with members. And as a result, our operating expenses grew by 18% in the year, in line with the budget we'd set, in line with the increase in our income. And of course, we're not immune to the increasing cost of everything, given headline inflation. So that's also had an impact on our costs. The net result of all of that is that our surplus after tax for the year fell from £65,000 in the previous financial year to £13,000 this year. So it's pleased to report that despite all the headwinds, we are still in a surplus position, but obviously declined from the previous year. Our capital position remains very strong, improved slightly. Capital as a proportion of assets has risen slightly from 8.6% the previous year to 8.9% now, and that maintains headroom for future growth as and when conditions allow, above the minimum requirement of 5%. So we're well above that minimum. Very happy to take any questions or comments on the financials before we vote to approve the account. Perhaps while people are typing in any questions that they might have, I will hand over to Mark Heaton from KM Accountants, who are our auditors, and he can just report on the audit of our accounts.
Thank you, Grant. Yeah, we audited the accounts, and our report is on pages 5 through to 7 of the statutory accounts, and our summary report is that there are no issues that we need to raise with the members on the financial statements, and that the financial statements give a true and fair view of the state of the credit union's affairs at the year end, and they've been properly prepared in accordance with UK policies, and yeah, we're no concerns at all to raise with you.
Thank you, Mark. We have, I think, 2 votes coming up. One is a vote to approve the accounts, and the other is a vote to reappoint KM accountants as our auditors for the current financial year. The board are very happy to recommend that. I'm not sure which order those votes come in, which is why I've mentioned them both at the same time.
Hi, Grant. Just before we move on, we do have one question, if it's all right. So Hilary Claydon asked, can we give more information about where the credit union's funds are invested, please?
Yeah, so we invest in a number of major banks primarily. We are restricted by regulation as to what we can do with the funds we hold on behalf of members, and we choose also to spread the funds across a number of banks to limit our exposure. You know, in the unlikely event that any one of those banks were to fail. So typically we have, I think we've got somewhere of the order of perhaps 8 different bank accounts. Obviously, a couple of accounts which are sort of, if you like, a current account whereby we can access the money very quickly, and some are on either notice accounts or term deposit accounts where we lock the money away for typically 6 months or a year at a time in return for a higher interest rate. But those are with the sort of major banks and a couple of major building societies that you might recognise.
Yeah, Hillary's came in and said what banks and is there any building societies, but I think you've covered that.
Yeah, I mean, if you want more detail, I can. I mean, if I just go down the list very briefly, we have Virgin Money, Nationwide, Santander, Co-op Bank, Aldermore, Metro Bank, Barclays, Lloyds Bank, and a couple more sort of more minor institutions which people might not be quite as familiar with, are Arbuthnot, Latham, and Close Brothers.
Thank you. There was one more question as well.
Actually, since the end of the financial year, we've just entered into a new account with Vernon Building Society as well.
Thank you. There was another question. Is the Co-op Credit Union large enough to remain in a standalone position, or is a merger required?
We are in a position where we can remain standalone. Our capital ratio is very strong, as I've indicated, and we've continued in a similar level and growing a little bit for quite a number of years. That said, if the right conditions became available for a merger, it's something the board would look at very carefully. We would only do that if it were in the best interest of our members. So we're not in a position that we would be forced to merge with anybody. Our financials are very strong, but if that kind of synergy or economies of scale were to become available through the right opportunity, we'd look at it.
Thank you. And there's one coming for regarding the capital ratio. Hi, in simple terms, why has capital ratio improved when profit is down?
So the capital ratio is about how much capital we've got as a proportion of our assets, and assets in this context is effectively the loan book. And broadly speaking, the loan book's been flat. So the sort of denominator of that equation has been constant from year to year. And although the profit's down, we still made a profit, and therefore our total level of capital has increased slightly, and that's why that ratio has increased slightly.
Okay, coming in for your passive jurist now. Are loans refused because of lack of funds?
No, I'll perhaps hand over to Matt to give more detail on why loans are refused, but it's not because of lack of funds. Clearly, that would theoretically be a consideration, but actually we've got plenty of money available to lend. The reason in making a loan decision, that the staff team will have to look at the ability of that individual to repay the loan for two reasons. One, we don't want the credit union to incur bad debt if that be responsible of us to lend members money out if we thought there was a likelihood of not getting it back. But also it's bad for the individual that they get into a spiral of debt they can't afford to repay. So we look carefully at the affordability of the loan.
Thank you. And last one, does the credit union operate any kind of ethical screening in its lending to financial institutions?
Not in a formal way. As I've said, I've listed the organisations we invest in. They're all major banking groups. So we're not going off the beaten track in terms of where that money goes. But there's not a kind of formal policy in terms of ethical screening.
Okay, that's all the questions that have come in so far. Thank you.
Okay, in that case, can we move to the two votes I mentioned to approve the accounts and also to reappoint the auditors?
Okay, so the accounts. Okay, so we've got 86% of members that voted, and it's a majority yes, the accounts. You're happy for that vote to be closed? So 89% of the 41 members that we've got online have voted.
Excellent, thank you very much.
And to approve the audit, to reappoint the auditors. And again, we've got 89% of members that have voted, and it's a majority yes.
Thank you very much, Jackie. I'll move then to the final part of my report, which is to recommend the dividend for the year. The board is proposing a dividend of 0.4% on savings balances, which is a slight increase on the previous couple of years where we've paid at a rate of 0.25%. We do recognise the context of rising interest rates, although in the financial year in question up to the end of September, for the majority of that time, rates remained at a very low level. And therefore the interest we were able to earn on our investments with those various banks we've talked about was low, and consequently so is the amount available to pass on to our savers. We also have to recognise in proposing a dividend that our first duty as a board is to ensure the ongoing stability of the credit union and to maintain our capital strength and ability to withstand the very challenging economic times we're in. So we need to hold on to capital in order to maintain that strength. And the proposed rate of 0.4% seeks to balance our need to preserve capital, invest in growth, and support our borrowers, whilst at the same time rewarding the savers who provide our capital. We certainly have an ambition to increase that rate of dividend in future years, in 2024 and onwards, as interest rates continue to rise. But we propose for this financial year that 0.4%, that's the board's recommendation.
just launch the poll. So we've got 83% of the members online that have voted, and the majority yes. You're happy for the vote to be closed?
Yeah, thank you. Thank you very much. Okay, that concludes my section on finances. Unless there are any further questions coming in, and then I'll hand over to Matt to give the Chief Executive's update.
Thanks very much, Grant. And thanks everyone for your support with those polls. So, Chief Executive report. I'm trying to run the slides and talk at the same time here, so just bear with me a sec. Okay, so yeah, it's great to be with you all again today. This is the third time I've been in this seat for Credit Union AGM, and it's great to see so many of you logging on today. I think there's more this time around than we've had on the last two online AGMs that we've held. So thanks a lot for taking the time to come along and listen to us and report on our year in 21-22. We really do appreciate your time. So yeah, as has already been mentioned, 21-22 year ending at the end of September of last year, you know, was a difficult year, and I think that's the case for everyone really. You know, inflation hasn't been at the rates that we've seen it in the last 12 months or so for 40 years, and you know, that's a big shock to the system, and it means, unfortunately, as Davey mentioned in particular, that you know, our members, you know, many of whom are in relatively low paid work, working in co-op stores up and down the country, you know, finding things really hard. You know, inflation for you know, at the headline level across the economy has been about 10%, but actually, you know, if you spend a larger proportion of your income on, you know, things like energy, food, and fuel, then it's actually been much higher than that. It's more like 20%. And you know, if you're already someone who, you know, was finding things relatively difficult to make ends meet, you know, that increase in prices has really been a big pressure on your finances, and unfortunately that is something that we're seeing and we continue to see every day when we review member applications for borrowing. And so, you know, as has been mentioned already, we were really proud to have been able to implement new support for people in light of that context. And it was really timely that, as you'll recall if you were here last year's AGM, it was really timely that we had just concluded our purpose project process. And I'll talk a little bit about where we think we are as regards the commitments we made to coming out of the back of that process last year in a moment. But some of the things that we very definitely committed to was to you know, our focus on you know, those who struggle to access a fair deal, in particular when looking to borrow, but also to encourage people through building savings, reducing the amount they spend on interest, to support financial resilience and well-being, and thereby support, you know, better mental health. So things like the hardship fund, the benefits calculator, and our partnership with Open Money and their budgeting tool have enabled us to offer something to people where, unfortunately, you know, their financial position doesn't allow us to, in good conscience and in keeping with our regulatory obligations to lend. And so we're really proud that we've been able to respond in a different kind of way, in a new kind of way to those challenges that our members are facing right now. We've also invested in resource, so we brought on Mel Phillips, someone I've mentioned a few times in these meetings, to work with us for a long time as a freelance marketing support. But we're delighted in the financial year, in April of last year, to welcome Mel as our marketing business development manager, and we're really focused on building stronger and more involved relationships with our partners and potential partners, in particular in the co-op retail sector. You can see here this image of me on what's an electric scooter, electric e-moped from a company called Silence UK. So we've been exploring during the year a scheme with our partners at Mid Counties Co-op to finance the purchase of these green and, in the context of escalating fuel prices, quite affordable alternative modes of transport. And I even got to have a go on one, as you can see. And I enjoy it. I did too. We're also very delighted to welcome Radstock Co-op as our latest payroll partner employer down in the southwest of England, and it's something that we hope to build on. This partnership and development with our employer partners, that Mel's support in particular has helped us really build on over the course of the year. I'm just getting a message saying my sound is not very clear, so I'm just gonna try something, see if this improves.
Matt, we've lost you altogether now.
No?
Yeah, it's better. We've got you back now. Yeah.
Got me. Okay, great.
Yeah, just keep still.
I'll try. My colleagues on the staff team will be laughing at this because these headphones are notorious for not working properly. But with several of us in the office today running the AGM, it's the best way to ensure there wasn't background noise. So hopefully they'll keep working as the meeting goes on.
Thanks, Matt.
We've also got some exciting developments ongoing in relation to product development and technology. So we were lucky enough to be awarded a grant from an organisation called Fair for All Finance to trial a revolving credit product, and we'll be looking to launch that in the next few weeks. And that's a new way of supporting our members by granting them a credit limit upfront and an ability to draw down on a facility as and when required, so that you've got the peace of mind of knowing that you have that to fall back on should you require it. But we want to avoid some of the downsides that come along with other types of revolving credit facility, in particular credit cards, where we see people paying minimum payments and essentially just paying interest for in some cases many years, which is a good position for the lender because they earn lots of income through those arrangements, but it traps borrowers in debt. And of course that is a commitment that we've got in terms of reducing what people pay in terms of interest on their borrowing, as I've mentioned already through the purpose project work that we did, and so we're excited to trial what we think is a kind of innovative way to provide the benefits of a revolving credit facility without some of the disbenefits, in particular that minimum payment model. So keep your eyes peeled if that's of interest to you. We'll be launching that in the next few weeks. As I say, we're just finalising some of the details around that at the moment. We're also excited to be investing in a technology upgrade, which will, during the course of this year, allow us to offer services again in a different way, in a new way, with a properly branded mobile app experience that we don't currently have. Some of you might be familiar with the Nevo messaging service we offer, but that, you know, we had some strong feedback from one of the member fora that we showed on screen earlier actually this year, that staff sometimes can feel a bit disjointed as an experience, you know, having this other brand to remember has something to do with the credit union, with this Nevo app that people sometimes forget, you know, why they ever downloaded it. And so we'll be integrating and enhancing the experience you have when you deal with us, when you want to review your account, when you want to apply for a loan, or just check what your balance is, or withdraw some money. And so we've spent the year, though the growth hasn't been where we'd like it to be and hasn't been what we've been able to achieve in recent years. We have spent the year investing and preparing for what we hope will be, you know, future growth for the credit union in the months and years to come. We've also been investing, as we have done over a number of years, in our governance and assurance model, and so we successfully implemented an internal audit process with partners at a firm called Alexander Sloan, based up in Glasgow, this year, which has yielded some really strong positive feedback and given us a really clear to-do list, if you like, of things we can do to further enhance and improve how we ensure that, you know, we're marshalling your funds as best we can, and in as transparent and as robust a process as possible. That's something you may recall we put to your vote last year at the AGM, when we abolished the supervisory committee that previously conducted our internal audit. So we feel that, you know, it's been a positive year in terms of enhancing and investing in our infrastructure and our business approach, and we hope that we'll start to see some of the benefits of those things coming through in the months and years ahead, as I've mentioned. I also wanted to mention quickly the staff team. So I was delighted. I think it's a real testament to the experience that we have serving you, and hopefully the culture that we've been able to build within the credit union, that we've got exactly the same, apart from the addition of Mel, of course, that I've mentioned, exactly the same set of colleagues that we had at the beginning of this year as we concluded it, and even still today, some months on from the end of the financial year's closing. I think that demonstrates that, you know, that it's a really worthwhile and valuable and enjoyable job to do, and to serve you, our members, and to work in a different kind of way through a credit union as a cooperative organisation that wants to do business in an ethical and positive way. So I want to say thank you to the staff team for all their efforts over the course of the year. I know they're all listening in intently and laughing at my issues with headphones, as I've mentioned. I also want to say thank you to your members. We probably survey you a bit too much, those of you who keep an eye on our monthly newsletter email that we send out. But during the summer months, I think it was in July, we did a survey around various things to do with, you know, kind of experience using the service. And what this is, some of you may be familiar with this Net Promoter Score question, is how likely would you be to recommend the credit union to friends or colleagues, and we got the way the score works is we take those that gave us a 9 or a 10 to a really positive score, and detract from that all the people who gave us a low score, and sort of 5 or below, I think it is off the top of my head, something like that. Anyway, we get this score which is either could be as good as positive 100 or as good as bad, should I say, as a negative 100, and ours is positive 61. So which is a really, really strong result for a financial services organisation in particular, and I hope is one indication, we like to think it is at least, of the value and the positive experience that members get from using the credit union, being members and having an account with us. That's not to say we're resting on our laurels and we think, you know, that it's job done by any means. As I've said, we've got lots of exciting things going on in the background, investments that we're making and so on, but it is gratifying to see that the things that we're doing every day are well received, and so, you know, again, I want to say thank you for your commitment and support as members of the credit union, your continued loyalty and feedback, which more often than not is constructive. Next, I wanted just to talk a little bit about impact. So early in 2021, I think it was, so some time ago now, March 21, I think, we did the first impact report that we'd ever done as a credit union, looking at different ways in which we could measure the social benefit, if you like, the positive impact beyond our financial success that we think or hope we have in terms of what we do for you, our members, and these are just some of the ways that we like to look at that. So you can see, I think that the big headline that I particularly like to emphasise is the £1 million figure. So we've reported a few years now around what we think we've saved our borrowers in terms of interest that they might otherwise have paid to some of the high cost lenders that unfortunately we see members borrowing from, as well as using our services on a daily basis. And over the last 3 years, we think that we've conservatively estimate that we've saved members upwards of £1 million in interest that they would otherwise have paid to these less scrupulous lenders out there in the market. And I think that's a really good example of how we deliver a real value to our members that puts money back in their pocket, that especially in the context we've talked about already, has never been more important. Also wanted to emphasise, we've talked about the hardship funds. You can see we made 10 awards during the financial year. Bearing in mind that was something we only launched in the middle of the year, in the spring of 22. We made 10 awards worth £2,400 in total, and some of the stories behind those awards are some quite distressing, really, in terms of the reasons we had to or wanted to support those people who'd applied to us to borrow, for example. We didn't think that was right, didn't think they could afford to repay a loan to us, but we did want to help them. And as David mentioned already, some of that involves, some fairly nasty situations, which a bit of money from us, no obligation to repay, we hope has helped them to, to take some positive steps forward in their lives. We're also proud of the fact that we're disproportionately lending to women who we think are underserved in the market generally, and to younger people too. You can see on the benefits calculator as well, just a bit more than 350 members went through that benefits calculator process, and I'm not sure if it's very clear on the screen there, but on average those people could claim £619 per month, the majority of which they weren't claiming prior to using this calculator. So you can see that's real impact that we can have to support members' finances in a difficult situation with prices on the rise. And then finally, just to show that we're leaning into those groups of society and those communities that are least well off in general. You see that little chart in the bottom right hand corner of the screen there shows the amount of the number of loans that we issued across the 10 deciles of indices of multiple deprivation, and you can see there's a sort of direct line proportion between the smallest number of loans going to those most affluent areas and the largest number of loans going to those least affluent, and the line follows through from one end of the scale to the other, and we're proud of that. These are the people in society who are least well served and unfortunately most ripped off in general, and it's those people that we want to focus on supporting as a part of our core part of our mission. So we're really proud of that as well. Now to move on to you can hopefully see that now. So this was our report from last year around the purpose project work that we'd done that I mentioned briefly at the beginning of my report, and we wanted to report back to you on where we think we've got to with some of this stuff, and I've given a little kind of tick for something we think we've done positively, a question mark something we think more needs to be done, and then across where I think we've not achieved anywhere near as much as we'd like to. And I think overall we're reasonably pleased. We certainly continue to deliver on the commitment under social goals to ensure that those proportions of our business that focus on those that are least well served in the market continue to meet the thresholds we set ourselves. David showed a picture from our member inclusion and innovation forum. We changed the name to from commission. I think commission, it was felt in hindsight was a bit grand a term, but we're committed to continuing that process on an annual basis to explore things we could do that are novel, that are new, that could support you in a better way than maybe what we do today, but also to explore some quite sensitive and challenging issues around inclusion as well. And we got some really positive feedback, some of which have already been able to implement, and others we've got firmly in our plans around how we can continue to develop and become more inclusive as an organisation. We also continue to meet the Fair for All Finance Affordable Credit Code of Conduct in our own sort of self-assessment, and we think the fact that they've been willing to give us that grant I mentioned earlier for the revolving credit trial, which demonstrates that they perceive us as an organisation that's meeting their expectations as a good lender as far as member outcomes is concerned. We've got more to do, we recognise, in terms of the campaigning, in terms of monitoring and analysing the diversity of membership, and in terms of building on the tools that we've already mentioned on the benefits calculator, the budgeting tool in particular, so that we can integrate those into a consistent experience. And some of the technology investments that I've mentioned already will support some of those ambitions as we go forward. And then finally, to be completely candid, I think in relation to some of the stuff we committed to doing around vulnerable members, and being, not just doing the minimum that the regulator would expect, which we do, of course, but going beyond that to deliver a best practice model around supporting vulnerable members. We recognise that we've got a lot more work to do there, and so we're open about that, but it's not something that we're therefore going to drop. We'll continue to work on that agenda as time goes on. I should mention as well, for the first time ever, we've done a formal annual report this year, and that was published along with the papers for this meeting and is available on the website. I think it's also available to download from your meeting control panel under the handouts. And a lot of what we've talked about today, including some of this stuff around impact and around purpose project delivery, is contained in that annual report. So we encourage you to download it and have a read through. So we're now moving on from my report to the committees, but I wanted just to pause at that stage as well. I haven't been monitoring the questions as I've been talking, so if there have been questions coming in, Jackie, if you wouldn't mind, let me know, and then I'm happy to at least attempt to answer them.
Yes, there was just two came in, Matt. So one was, with rising interest rates in the banking world, would the Co-op Credit Union consider during the coming year making an interim increase in the dividend rate past 0.4%?
Certainly we would consider it, and we have thought about that as an option, along with a number of other potential ways around addressing what we recognise is perhaps a slightly disappointing rate of return in terms of the dividend. Just emphasise what Grant spoke about on that point earlier. This is relating back to a financial year in which some of the increases in interest rates we're now seeing weren't evident. That sort of happened from the autumn onwards, but it also does reflect our commitments to strategically investing and focusing on growth, to and supporting some of our least financially resilient members of society as a strategic priority, but also the reality of the financial position that we're in as well. You know, it's been a difficult year for everyone, and you know, you've seen that it reflected in the accounts and the results. So we didn't make that decision lightly, and we recognise that, you know, at least some of the membership were likely to be a bit disappointed with the rate we were declaring, and we do plan towards paying a better rate of return in future. Yeah, and that may include an interim dividend. It's not something we've ruled out, certainly, and we'll continue to keep that under review.
Thanks, Matt. Let me just put in the question, perhaps an excess could go to the hardship fund, just as a thought. And the other question that came in was, does the credit union recognise a trade union?
For staff, so I think we're a bit small, so we have 9 staff. So I think a kind of recognition agreement with a trade union, yeah, I think we're a bit small for that. We certainly don't, you know, have any opposition to unionisation amongst our staff, and we do, in fact, you know, one of our key strategic partnerships, and one that we're investing in quite heavily at the moment, in terms of promoting our services to members and potential members, is with a trade union, the Shop Workers Union Usdaw. Yeah, I think you know, we're a small business with only 9 staff. I think to have a recognition agreement with a trade union, typically an employer is larger than that, but we certainly don't have any opposition to unionisation. And in fact, you know, it's worth saying that through the course of the year, the in question and the one that we're currently in, you know, we have taken decisions to increase pay for our team, both, you know, on an annual basis and in the interim in spring of last year, to reflect the pressure on them, you know, in terms of cost of living. And we're committed strategically, as part of our business plan, to invest in our people, and to, you know, to value their contribution to our success, as a right thing to do as an ethical business that wants to do things a bit differently to how things are done in the mainstream. And I think that, I would hope at least that, you know, their recognition of our, you know, commitment to them is demonstrated by what I said earlier, and the fact that, you know, we have a stable team that has remained the same through the last few years. So yeah, that's what I'd say. That so no, strictly speaking, but we like to think we're a supportive employer.
Thanks, Matt. Just one more as well, not too sure whether it's for you or Grant. Can you explain the 35% loan interest rate?
We explain the 35% interest rate on our smallest loans. Yeah, happy to. So we, you know, 35% may appear to be a high interest rate as far as, you know, the rates that a prime borrower with good affordability profile might be able to get from one of the, you know, market leading lenders in terms of interest rate specifically. But typically those loans are large loans, and they are not accessible to the kinds of people that we would lend to at that 35% rate. So we only charge that rate for loans of £1,000 or less, and typically in the market for a loan of that size, you're paying at least, I would say, 60 or 70% APR, and we actually see in some cases significantly higher rates of interest than that. You know, the worst example I've seen in recent years is approaching 1,000% APR. You know, borrowing £400 and paying back £1,600. You know, daylight robbery, frankly. So even a bank overdraft in the current market, following some regulatory intervention a year or two ago, now charges 40% APR. And you may just by watching some of the adverts for for credit cards out there at the moment, some really high profile leading credit card brands are charging 50, 60, 70% APR on their facilities these days too. So 35%, you know, the bold number on its own without any context may appear high, but we're confident that for the kinds of credit that we charge that rate of interest on, i.e. small loans of under £1,000, actually it's the best you're likely to get in the marketplace, and we're proud of that fact. But equally, we need to be able to ensure that we're not lending at a significant loss, and that, you know, we're our financial position as a business stacks up. So we think 35% is a reasonable balance, although I appreciate, you know, without some of that context, it might seem high. It's worth also mentioning, just before I finish on that one, that, you know, it is only for those small loans that we charge that rate of interest, and actually our largest loans of £10,000 or more, you know, we're charging a rate of 11.8%, if my memory serves me correctly. So, you know, we wouldn't dream of charging that kind of rate of interest on a large loan over 5 years. You know, it's a reflection of the kinds of loan that we're doing at that small value end. But we're confident that that's a you know, very competitive rate of interest, as I say.
Yeah, that's it. There are a couple more comments that say it seems too much. Can you not work on reducing that? And it seems unethical, but I think the explanation that you've given, that, you know, it's not every loan, is it?
It's certainly not. It's certainly not. And as I say, you know, maybe with more time, if a member wanted to talk about it in more detail, you know, I'd be happy to go into more detail around it. But, you know, we look at the market, the rates of interest that are available, and, you know, we're confident 35% is competitive. It's some way below the maximum that credit unions can charge, by the way, in terms of the interest rate cap, which is 42% or 3% per month. And actually in pounds and pence, I'm not going to try and make the numbers up off the top of my head now, but, you know, it's a relatively modest amount. So, you know, and we've just had the question about dividend, of course, as well, and I think that's an important point to make too, because, you know, we need to balance the interests across our borrower and saver members. We recognise borrowers want the lowest interest rate they can get. We also recognise that savers want a higher dividend rate, and you know, we can't give everything to everyone, so we're trying to strike an appropriate balance. That's where we've landed right now. Take the feedback; it appears high, but, you know, I think I'd be willing to defend the rate, and regularly do, in fact, to some of our employer partners who equally may look at it and think that seems high when they compare it to the rate they may pay, you know, for a large personal loan to put a conservatory on the house, considering they're senior members of executive leadership in relatively large businesses. But the reality is, for the people we're serving on low incomes who are in real desperate situations, it's as cheap as anyone is going to lend money to them. You know, credit unions in general, that's the case, and we're no different.
Thanks, Matt. I have explained it. You're happy to take it offline if necessary.
Yeah, absolutely. If there's anyone out there who wants to talk about that some more, if you look at the annual report I mentioned earlier, my contact details are there. I also sent out the papers from my personal email address yesterday or Monday. So just get in touch. Happy to talk about it.
Thank you.
Any more, Jackie, or can we move on?
One's just popped through. Just let me just read that. Yeah, no, it's fine, Matt. Thanks.
Yeah. Okay. Okay, so at this point in the agenda, we're not going to go into the committee reports. They've been published for your benefit in advance of the meeting on Monday. This slide hasn't been updated properly from last year, so that should read: Risk and Compliance, Nominations and Reward, and Audit Committee have each published reports. So the Audit Committee oversees internal and external audit, and replace the supervisory committee following the vote last year. So all 3 have written reports, the chairs of those committees. They're there, hopefully you've had a chance to read them. And now's a chance to ask any questions you may have of any of that. So we'll leave it a minute or two, give you a moment to type a question into the chat function.
Just one more question coming. Lending delinquency rates actions being considered. I'm not too sure. Can you just, yeah, lending delinquency rates actions being considered. I think is it our lending delinquency rates actions being considered?
Yeah.
Just...
So on the delinquency, you know, this is a key. It's relevant to Robin's committee in particular, the Risk and Compliance Committee. But it is a key risk for us as a business. You know, the losses on the loan book have a direct impact on our financial position, on our results, our ability to pay dividend, and so on. So you know, we look at it closely all the time, and we're very anxious to ensure that we minimise losses. But equally, we're also committed strategically to continuing to support some of those in society who are struggling financially, and so we have to take a certain amount of risk to do that. Lend to people who, you know, have had some problems in the past repaying credit, for example, and you know, so whilst the delinquency rates are higher than we'd like them to be at the moment, you know, we that's not as a result of us not kind of being very alive to that risk. Something we've reviewed a few times during the year. We've looked at ways that we could manage it. We've actually tightened up the criteria that we apply to those highest risk loans that we make in the year a couple of times as well, to try and prevent some of that delinquency from ever occurring. And I've mentioned last year as well that we've invested over the last few years in our credit control function. So Joan Pollitt on the call today, she's listening in, long-standing member as well as a member of the team, and her manager of the finance, banking and credit manager, Joel Williams. They run that credit control function and spend time engaging with those members that have difficulty repaying in a way that we've never really done before. And we also look at the detail around the credit control and bad debt kind of book, if you like, in much more detail at a board level than we ever have done before. So that's not to say that we couldn't improve further, and we continue to do that. We think some of the technology investments we're making will support that, for example. So we'll continue to keep it under review. But we have taken action on that agenda. Unfortunately, the reality is that, you know, for more members of and potential members than we would like, you know, the current inflation is really hurting their ability to repay the credit they took out prior to inflation happening in the way that it has, you know. And I think there's some way to go on that. Unfortunately. So were there any questions on the committee reports, Jackie?
No, there isn't, Matt.
No? Okay, so I guess in that case we can move on to the motions. Just conscious of time, we've got quite a bit still to get through. So this is me again. I'm going to take us through the motions that we're proposing, and there'll be a vote on each of these. There are 2 of them for you to hopefully support and ratify our proposals. These are rule changes, and so they require a 2/3 majority to be approved. So the first one is about expanding our common bond. As you should probably know by now, we have a credit union. One of our quirks as businesses is that we have this eligibility criteria, something that's referred to as the common bond, and it determines who can and can't join the credit union. And over a number of years, there have been successive legislative initiatives to liberalise the regime around the common bond, and we as a credit union have taken advantage of some of that. It's enabled us to do some of the things that we do now already in terms of, for example, offering our services to both members of and employees of different organisations. That wouldn't have been possible prior to some of the legislative reform that we've seen over the last decade. And what we're proposing today is to build on some of the expansion we've previously done in three principal ways. Firstly, we want to align the members of and employees of elements of our common bond, because currently we have a situation where employees of more or less all of the independent co-op societies, for example, are eligible to join the credit union, but only some of those societies can offer the service to their members. So we have a slightly odd situation. Periodically, the team have queries come in around people wanting to join, but they're a member of the wrong co-op society. So if they were a member of Group or a member of Mid-Counties, they could join us, but because they're a member of one of the other co-op societies, they can't, even though employees of that same society could join. And so we think that's a bit of an anomaly. So we're essentially replicating the list in the proposed new rules, so that those people who are employed by any number of these co-op societies that are listed in the proposed rules, you know, their members could also join. It's exactly the same list. So that's the first element. The second is to add two specific organisations to the members of elements. These aren't co-op societies per se. The first is the Football Supporters Association. So it's an organisation that we've had some dialogue with recently, who have an interest in offering our services to their members. They support an agenda around the rights of supporters of football clubs, and in particular member-owned football clubs. You might, quite a high-profile example here in Manchester. For those of you maybe Manchester United fans might have heard of FC United, for example. It's an example of a fan-owned club that was set up as a different way of doing football club governance, and this Football Supporters Association supports those kinds of initiatives, and they have I think several 100,000 members around the country who are all football fans who, you know, believe in a different way of running the game, and you know, might also believe in a different way of doing the finances. And so we wanted to make that a possibility through adding them to the common bond. And we also have Electric Zoo, which is an organisation we've been talking to around the potential to offer financing for people wanting to on a short-term basis to lease electric cars, and we think that there is this legislation coming through currently around allowing credit unions to do secured financing on assets. Potentially cars are probably the most obvious example. It's not limited to cars necessarily, and so this is an opportunity for us to sort of dip a toe in the water in that space, and we think that it's worth exploring, especially with the agenda around you know, decarbonising transport and so on. So those are two specific partners that we've been talking to that we'd like you to support us to offer our services to. And the third one is quite significant, and it's a bit unwieldy in terms of how the rules appear. And if you've had a look at, you'll see there's a list of occupational classifications that come from the Office for National Statistics that goes over several pages, and it's not much fun to read, but it is a model that credit unions have increasingly used in order to be able to go out and form partnerships with organisations without listing them in their rules, if you see what I mean, in the way that the other two changes do. So that, for example, we could, if there were a co-op organisation that wanted to offer our services to its people, but that we hadn't kind of listed on the rules already, these changes would allow it, without having to come back to the members every year to say, can we add X, Y, and Z organisations to our rule book? And we did this already in the retail space a couple of years ago, and you were very kind in agreeing and supporting that change. And what we're proposing to do now is to add, in addition to the retail sector, the wider co-op sector, the charity sector, and the housing sector, and all three of those come out of concrete conversations we've been having with co-ops that aren't retail co-ops, so in the housing sector in particular, and charities as well, who we think have a nice alignment of values and with us as co-ops, and have a social focus as well as a commercial one, and have lots of people who work for them who need the sort of services we offer as well. So it's anyone more or less who works in those four sectors would be eligible to join us in future through this expansion. Yeah, I'm happy to take any questions if there are any on that before we move to the vote, but we hope that you'll support it. Really, this is about setting the conditions for us to be able to continue to pursue the growth agenda that we've been focused on for some time, and future-proofing those rules so that we don't have to kind of wait for the next general meeting each time we have a encouraging conversation with a potential partner in the way I've described. Any questions on that, Jackie, before we move to the vote?
No questions come in so far.
Okay. In that case, should we take the vote? As I say, we need the 2/3 majority for a rule change of this kind.
Somebody's asking, what about hospices being added to the common bond?
Hospices?
Yeah.
Unfortunately, I've had the from a family perspective, some engagement with a hospice over the course of last year, and I think I'm right in saying they're organised as charities, so they would be covered by the proposed rules.
Thanks, Matt. We've got 83% of members that have voted. We've still got 41 members online, and it's a 97% yes.
Okay. Thank you. Thanks, everyone. That's great. Oh, so I've gone off the slideshow view there. Sorry about that. Okay, so we'll move on to the next motion, which is reforming the role of secretary. So I don't know, for as long as certainly I've been involved in credit unions, which is going on for 15 years now. I know I don't look old enough, but yeah. The secretary role in the standard model rules that credit unions tend to use has been part of the formal board of directors. But I think that probably comes out of the roots of the credit union sector in the UK, where we've been, voluntary organisations that have grown up out of, the organic kind of trading that we've done. And that's true. This credit union, of course, founded in '98 by a group of people working at Co-op Group, and in those early days didn't have any staff, and so it made sense that the secretary role was part of the board. However, we're fortunate in many ways with our board of directors. As I've said in previous meetings, and I probably ought to have said already, but at this stage, during this meeting, that we have a very skilled, experienced credit union board with lots of different kind of backgrounds and expertise that they bring. And one of the benefits of being so closely aligned with the Coke Group is that we've historically been able to recruit secretaries to the board from the secretariat of the Coke Group, and that has meant that we've been able to access some really skilled company secretaries. Claire Dalton, our current company secretary, and a former, she had a hiatus for a little while, but she's come back to join us, and we're very happy about that. Is the most recent example of this, and in dialogue with her in particular, we've sort of explored this idea that the secretary should be a director, and she's given us the advice, which I think we are supporting with this rule proposal, that good corporate governance would not typically see the secretary to the board being a member of the board because of the either perceived or real potential for a conflict of interest there, because a company secretary typically acts as an advisor to, as well as an administrative support to the board, and so if they're part of that decision themselves, then it may influence the advice they may otherwise give. And so, taking that guidance on board, we're proposing, as part of the welcoming Claire back to be our secretary, to change the rules such that the secretary role is defined within. There are various places within the rules where it refers to certain things being done by the secretary, or you send in, for example, a resignation from the board to the secretary. That's as an example. Those things will remain, but it clarifies that the secretary role is technically not part of the board, but is someone who provides advice and support to the board as a separate thing. And so the rules that we're proposing, we think, reflect that. In essence, it removes secretary from one of those offices that the board elects from its own number, and then creates a new definition in a new rule. And then it also has the knock-on effects of changing the numbering of the rules thereon, because a new rule has been added. So hopefully you had a chance to look at the wording that we're proposing on that. And we think it's a positive step forward and a part of our maturing as a credit union and in our governance. So yeah, if there are any questions, happy to take them. Otherwise, we could move to a vote again.
There's no questions come into the question tab so far.
Okay. I think we could probably go for the vote then, Jackie.
So we've got 92% of the members that have voted, and it's a 97% yes.
Okay. That's great. Thank you, everyone. Okay, so I think that's the end of my little bit of the agenda. So thanks for listening, everyone. I invite Chris Smith, one of his final acts as one of our esteemed colleagues on the board, to present this section of the agenda on elections. Are you there, Chris?
Yes, I'm here. Thanks very much, Matt. Good afternoon, everybody. And this part of the annual general meeting is where we address the election of directors to the board. And over the last few years, there's been a considerable tidying up of the way in which we recruit directors and in general, the governance arrangements surrounding the elections is really first class that Matt and team have put in place. And as a result of me stepping down after the set periods that now directors can stand for. There is a limit to how many years that directors can stand for, and then they have to recycle and leave for at least 1 year before they dare return. Myself and former chair David Dickman is stepping down. As a result of the recruitment that the board carried out in terms of looking for fresh directors, we were very fortunate in being able to put forward 2 candidates today of Justina Gray and Andy Cheadle. They come with excellent credentials, and incidentally also help us in terms of making sure that we are more of a national spread with our directors, because both of them come from the southeast of the country, as opposed to the majority of us usually coming from the northwest, and we've been conscious of this for some time. So we do address that. You'll see that in your pack that both Justina and Andy have put in a brief couple of paragraphs about themselves as their election address, and as you can see, excellent credentials. I mean, you couldn't get better than this. I mean, Justina, because she's a mother and she's got an 8-year-old daughter, and that definitely represents the market that we're trying to attract to the credit union in terms of new membership. So she'll understand the struggles and the day-to-day running of a family life and how a credit union can benefit. And she's much more in tune with it than, say, me or David Dickman. So I hope you do elect Justina. And just as importantly, we were successful in being able to put Andy Cheadle in front of you today, who comes with a wealth of financial expertise, not the least a long spell working for the Financial Conduct Authority. So I wonder if now he's going to be a poacher turned gamekeeper or gamekeeper turned poacher. It'd be nice to ask him that afterwards. But we put these 2 people in front of you today, and we go to a vote, I think. Do we, Jackie, please?
Yes, we do.
Okay.
And the two separate votes. So Andy's first.
Thank you. So there's the vote in front for Andrew Cheadle. Please vote now. And how's that now, Jackie?
Got 89% of members voted, and it's a majority yes.
Thank you very much. Can we now vote for Justina? Thank you. That's excellent. You can vote for Justina now, please. Please vote, everyone.
And again, that's 95% of members voted, and it's a majority yes again.
That's excellent. Thank you, Jackie, and a big welcome to both Justina Gray and Andy Cheadle as formal directors of Cooperative Credit Union. Thanks, Jackie. I think I am back to Matt now, do I?
I think it's you, David, isn't it? Oh, sorry, yes, Chris, it's you for the lottery briefly.
Yeah. Okay, yes, so I'm back on again. I forgot that I was a Friends of the Co-op Credit Union. Many other members will know that we run a lottery, as do many credit unions, but because of regulation, we cannot run the lottery as part of our business. We run the lottery alongside as a separate entity with its own small group of volunteer trustees, and that I believe the papers are in your pack today. and it's overseen by a committee, and it's also audited independently as well. And the financial statement on the lotteries, and it's quite healthy. It does well. It recycles half of the money back into prizes for the members, and the other half of the money goes back into funding projects within the credit union, and has been very successful for years. So that I think is just a notification to you. Thank you. Over to you, David or Matt, I'm not sure.
I'm back, Chris. Right, okay. Every year we present the Graham Southall Award to reward exceptional service from volunteers to the credit union. Graham was one of the founders of the credit union, and without his efforts we would not have been here today. He was made an honorary life president on his retirement back in 2014 after 48 years in the co-op group. And this award was created in his name, and following his early passing in 2019, it remains in his enduring memory, given the role he has played in getting us all here today. As I mentioned earlier, this year we are marking the retirement of two long-standing directors of the credit union, Chris Smith and David Dickman. Chris, one of the co-founders, along with Graham, back in 1998, has been involved in credit unions now for 29 years. And David has been with us for 19 years, 6 of those as chair. We've asked one of our former directors who is with us today, Nick Money, who joined the board back in 2001 and was with us for 18 years as a member of the board, and is still a member. So over to you, Nick, for a few words, please.
Thanks, David. Yeah, well, this is an absolute privilege, and I'm sure there's many people who could equally would have lots to say about these two remarkable people who have been literally vital to our credit union, to its growth and development, and in Chris's case, to its actual initiation. So I just wanted to say a few words of appreciation, really. I just Chris Smith is the man who got me onto the board in the first place. I was a member of the credit union, and I was I still put my money into the lottery to this day. But curiously, the only time I've won the lottery since the year 2000 was I won big. And there is a nice photo actually somewhere of me with the most, literally a big check about sort of 2 or 3 feet long. You don't get many checks with Nick Money written on them for £500, and that was a nice moment. But it appeared, Chris managed to make it appear entirely conditional on me volunteering to become a director of the credit union. And so I think I joined the board in 2001 and was there for a long time after that, and interestingly have never won the lottery since. So whilst I'm sure it's all being administered entirely appropriately, I feel slightly like I've been personally affected by that. But anyway, Chris has been it was Chris's vision that actually set the credit union off. I think in the early 90s, Chris was the one who was then, with cooperative colleagues, rallied people round. There's I think a group of those people on your screens now whose efforts and influencing skills got the group, the CIS and the bank to agree to support the launching of an employee credit union. And Chris was subsequently chair after that for on and off for many years. And so that was amazing. We wouldn't have that credit union without Chris and his colleagues' determination. And then when David came in I think probably sort of, would it have been the late noughties, the mid to late noughties, and really what Dave brought his his professionalism and his experience as a banker and determination that we were going to run this as a this was going to be a successful and growing organization. He professionalized the way we worked on the board, giving us sort of getting succession planning going, getting people to sort of work out what they wanted to achieve and as directors. But he also was really helpful to Andy Davey and Simon Carolan and the other leaders we had at the credit union over the half dozen years or more that David was chair. And also David, as with Chris, both of them, when they weren't chair, they were very often vice chair, heavily involved, lending their wisdom and ideas to directors and to the staff. So it was an absolute privilege to work with them personally, and I'm sure they're an inspiration to lots of other volunteers like myself. And I just wanted to say finally, I suppose, that their impact isn't confined to cooperative credit union. Chris was on the board at ABCOR for several years and has remained engaged in the wider movement, helping out in all sorts of different ways. And David too, particularly in the 2010s, David gave a lot of advice and guidance to some of the ventures that ABCOR was entering into. And so both of them have got made such a contribution. And so just finally, to say we should all as members be deeply grateful to these two people without whom this credit union would not be here, and if it had survived in some shape or form, it would not be the successful and expanding organisation it is today. So my thanks to David and Chris, and I'm sure everyone else would join me in that. I think you're muted, David.
Back.
Should be fine now.
Okay, thank you, Nick. It's lovely to see you. I hope you enjoyed seeing those photographs. A little bit of nostalgia, Chris and David through their credit union careers, and a very young Nick Money in that one on the bottom. As with all credit unions, the director role is voluntary. The tremendous amount of effort these two guys have put into this credit union and into others the scale of their contribution is immeasurable. For both of them, they do this because they believe in the concept of credit unions, they believe in the principles of cooperation, and believe in greater social justice. They are fervent cooperators. In my 37 years of involvement, my own personal involvement in the cooperative movement, they are perhaps the two most dedicated and impressive guys I think I've ever worked with, I've ever met. So this year we are making a joint award of the Graham Southall Award to Chris and David. Congratulations. And as a final honour, we're making them both honorary life presidents of the credit union, and we wish them well in their retirement from the board. Thank you guys, and well done.
We have a few words, maybe?
A few words, perhaps.
God, you go first, Dave.
Well, taken aback really with receiving this award. I think on reflection, I would just like to say it's been a privilege and most enjoyable to work with the dedicated team at the credit union, the various directors as volunteers over the years. It's the commitment and enthusiasm that has really taken us from a long way back when I first joined the board, I think we had 1,200 members, balance sheet of less than $1 million, to a balance sheet now of 9,000 members, over £7 million of assets, and a very professional operation run by Matt and his team. So I'd just like to thank everybody for their support over the years. We've got a sustainable credit union, and I think Chris and I are leaving it in very capable hands, and I'm sure the credit union will go from strength to strength in whichever direction they decide to take, because there are some big challenges coming down the line for the financial sector and credit unions. But for the members, you've got a very dedicated team of employees and also an excellent board. So I wish you well for the future, and thank you for all the enjoyment that I've got out of working for the credit union and helping a lot of members over difficult times in the years. So that's all I've got to say. Thanks a lot.
Well, I echo every word David said, because I've learned to echo a lot of words he says anyway. So over the years, there was always a wise thing to do. One thing I was looking at, we produced a booklet in 5 years ago, because the credit union is 25 years old this year, and on its 20th year we put a little booklet together, a history booklet, and in the back of the booklet there was all the people that we wanted to thank that had made the credit union over the years be successful, and there's 200 names there, and when I look at that list, I know every one of them. I just think it's not credit unions really that I love, it's credit union people that I love, and that's what's kept me involved with credit unions. Some of my best friends are from the movement, and lifelong friends, and I'm so proud of where the credit union is today, and I'm so proud. It's the best board that we've got at the moment, and I can say that because we're there at the first board. The board we've got now is the best board we've ever had. The employees that we've got are the best employees we've ever had, and they're crucial to the development of this credit union. I'm so proud of where we are, and it's a fantastic time to leave. It's like we've just won we're just at the top of the league, and me and Dave are stepping away. So whatever goes wrong after today, we can say, well, we weren't there. So, but I joking aside, I think it's wonderful that you're recognising us. But you know, me and Dave didn't really do all that much. I think everybody else did the work. It's just that we were good at sort of writing down who should be doing things and chivying people. I think that's all we did. There were some great people that I've worked alongside. Nick Money, that's just been on. I really missed him from the board, because I used to come out with the crazy ideas, and it was only Nick that calmed me down and pointed out it can't be done. So you know, you need that mix of people, and we always managed to get a great. And you know, after 25 years, we never fell out as a board of directors, and I think that was special. It was always done by consensus. Seldom did we have to go for votes on issues. It was always done by consensus, and that's got to be some sort of achievement for a cooperative business. A wonderful set of people. Thanks for honouring us too today. I don't think we deserve it. I think everybody else really does. Those 200 people in that book are the people that did it. We just happen to be there. But thanks, Emerson. Thanks a lot. I feel very, very humbled.
Thank you, guys. That takes us on to any other business. So I'll pause for a moment to give anybody opportunity to raise anything that they'd like to say, or to ask any further questions. Just pause, give you the chance to put something in if you want.
There's nothing in at the moment, David.
I think maybe thinking back to some of the questions we had earlier on, there was the questions to Grant about the investment portfolio, and I thought maybe we could just add briefly to that while people are answering, or sorry, submitting further questions. In terms of the options we have to invest, actually, they're quite severely restricted by the Bank of England, our prudential regulator, the Prudential Regulation Authority, to really just plain vanilla deposit accounts, and that's all that we can invest in. So you know, it's worth just bearing that in mind. Take the point that was raised around the ethics of those banks. I think we can give that some thought as we go forward. But from a kind of risk perspective, you know, we're quite limited in what we can do on the investment side. Not that we're itching to, you know, make some high risk investments if that wasn't the case, but you know, it's worth pointing out.
Yes, I mean we've got some considerable millions of pounds in various bank accounts, and I think there'd probably be some more questions asked if all that money was invested in, say, 2 or 3 ethical banks. So you know, we've taken the decision to sort of we've got to spread it around. Just the risk of any of these banks failing. It limits our choice.
Just a couple of questions there, Matt.
Couple of questions.
Review them.
I don't think I can see the questions coming in, I'm afraid. Jackie, can you ask them?
Yeah, it was relating to the elections, and I think the comment was about Justina being good for because she's a parent, and then somebody asked the implication is that someone who is a mother would be given preference to the board, but I think the board's application is for everybody, isn't it?
Well, I think I'd take the question head on. I mean, it's an interesting one. If you looked at the picture earlier on that we showed of the board of directors, just by dint of physiology, I think the vast majority of them don't have an opportunity to be mothers. So I think what we're trying to do is redress a balance really in terms of the profile of our board, and we take inclusion, diversity, equality questions really seriously, and we want to make a real effort to broaden the range of experiences and backgrounds that were represented on the board, because we think that not only addresses the kind of moral question of fairness, but actually leads to better decisions. I think the point that Chris was trying to make was essentially that older blokes, frankly, are not the ones, as we showed on the impact report, that are borrowing from us, are the ones that we're trying to deliver the services to. And so, it makes good sense, I think, in terms of responding to the needs of the groups that we want to serve and want to reach, that we listen to them. And so having someone like Justina come onto the board, who, that's not the only attribute that she brings in terms of her. She is a professional woman with a skilled job in the energy industry, as well as being a mother and so on. But it is important for us that we broaden the range of experiences represented on the board, and so we're not going to be shy about defending that position. That was a conscious part of our thinking around what wanting Justina to join us.
Thank you. Like I say, all the questions will be reviewed by the team after the AGM. Yeah, so there's nothing else been added.
Oh. Can you start? I think David's trying to. Are you muted, David? Is that? I can hear him because he's on the other side of the room. You see, so.
Yeah.
Oh, we can hear you now, David.
Yeah, I'm back here.
The
only thing I'd add to what Matt said was that we have the other thing. In Justina's case, was she's a member, and we on a couple of occasions when we've been looking for new members of the board, we've put notices out to membership and asked them if they're interested to come along. So it's look out for those notices as we go forward. Inevitably there will be further retirements or from the board, and there'll be a need to recruit new members. And we would love to bring on new directors from the existing membership. It's your credit union. If you want to get involved, I mean, there are roles other than directors. Like, we have need for volunteers and for other activities as well. So if you want to get involved, let us know.
Thanks,
Any
David.
other questions, Jackie?
No, that's it. Thank you.
Right. Okay. So I think that brings us to an end of today's proceedings. Thank you all for attending, and we'll see you all next year. Okay, thank you. Bye-bye.
Thanks, everyone. Bye-bye.
Thank you. Goodbye.